Hey, what's good? What's good? Yeah, it's Coach Rashid, and I am here to provide you with something amazing. We got some awesome information that we're going to give out today. I want to talk about some of the things that happened in 2025 and some of the things that's going to happen in 2026. Some of it's speculation, some of it's pretty much documented, and you can see the clear path forward. But at the end of the day, what you want to know, you will hear on this presentation. So I want to get right into it. Let's go. Check it out. All right. We're going to talk about blockchain, crypto, and RWA tokenization. What we all need to know to thrive in 2026 and beyond, of course. We're going to go from gatekeepers to gateways. The future is absolutely bright. All right, so let's jump into this one and let's see what we can see what we can do today. So I welcome you. I thank you. I appreciate you clicking on this particular channel, this particular video, because there is so much research that's went into this. And I believe that you will come out knowing a lot more than what you came here with. That's the goal. That's the potential and I want to deliver that for you. All right. If you haven't been on my channel, then know that I'm Coach Rashid, and you'll see that there's a lot of crypto, blockchain, and right now, obviously, we're getting into AI. We got some Web3, DeFi, all of those types of technologies we're going to talk about. And I want to make sure that you have the right information so that you can make some really serious decisions for your future going into 2026. So we're going to talk about this is the year of crypto clarity, right? So there's a couple of things that I was juggling with. Either this is the year of adoption with crypto or maybe crypto clarity. And, really, there's been a couple of things that happened in the recent days that kind of gave me the idea to change that to more of a clarity because there are a lot of things that are bringing on guardrails to make sure that we stay within the lines. But at the same time, it's kind of fuzzy on how that's supposed to roll out. And that was the problem in the first place. And that's why it took so long to get some type of regulation to come. And so, what I want to do is I want to talk about some of those things and how they impact the other decisions that are being made with DeFi and tokenization in this world. And really, I want to talk about that, but I want to give you kind of a game plan on how you can lean into the things that are working, the things that are advancing, and the things that will make you profitable in this coming year. Quick overview. You may be asking yourself, why does blockchain or crypto and tokenization, why does it even matter? But at the end of the day, why does it matter to me, right? Why does it matter to you? And you may be asking yourself, which everybody wants to know, what's in it for me? Why do I even care? Like, I'm fine with the fiat world. I see that there's a dollar. I see that everybody across the globe, when they talk to me, they talk in dollars. When we talk about investing, they talk in dollars. It doesn't matter if you're in Asia, if you're in the Middle East, or if you're in America, everything's in dollars. So why do I need to know about some digital currency? That's what you're going to learn today. But at the end of the day, I want to give you some context. So after hearing all about the new regulations that's coming to support cryptocurrency in many countries, you see that there's something going on, but you still don't have enough confidence in this new money. The real issue is not confidence. The real issue is education. We all need to know a few things before we dive into something or before we obviously put our trust or our confidence, which a long time ago, confidence was equal to actual money, right? Confidence was currency. And so education helps us to be more confident, and more confidence helps us to go ahead and make decisions that do benefit us in the long run. And so, with crypto being the future that's here now, you got to get educated so that you can be more confident, so that you can take advantage of what we have in front of us. Today, I want to explain how technology is becoming a major player in the future of money investing and transactions. Why do I use transactions in this same sentence? Because it's not just about money, it's not just about currency, it's about data that's being transferred all across different boundaries and different streams. So you want to definitely tune in, for those things. Even on Wall Street, at the highest levels, this is happening today. Last year, crypto was coming. Today, crypto is here. Think of it this way. This is the year of crypto adoption. What's the objective? This session is designed to help you understand why blockchain and tokenization of real world assets are leading the charge in the adoption and the future of money. I intend to give you some clarity on how to benefit from the adoption of blockchain technology in our infrastructure, financial markets, Wall Street, and especially in global real estate investments. I will demystify the fear around crypto, RWA, and tokenization. For those that take right action early, will reap significant benefits as adoption occurs. Who is this for? This is for you. Point blank, period. First thing we're going to talk about is crypto adoption requires guardrails. Yes, guardrails. What are guardrails? Regulations. Everybody wants to have some type of support from the regulatory bodies so that everybody's on a level playing field because it does feel like the wild, wild west when you get into trading, when you get into crypto, platforms, projects, or programs, any of those things, just like anybody else, that there are people out there that see an opportunity to take advantage of people's greed, take advantage of people's innocence, take advantage of people that just want to put their money somewhere and let it grow. They think it's the same as fiat. They think it's the same as traditional, investments. And they come over here and they put their money into some shiny object that they call crypto investment, and they run into some problems. That's where these countries have said we got to have something, right? And so that's what we call guardrails, right? If we can build something to keep people kind of in line and on the same page, then we can hold accountable those that don't want to play ball in our sandbox. So MICA is one of the regulatory frameworks that did create something in 2023, right? And so it's talked about a lot. And I'll give you some insight to MICA in a minute. VARA regulation was really the first one that laid out some real strong um, legalities, if you will, of how to do blockchain business in their country, which is the UAE. And the Genius Act, as we know, just recently became very popular. And the Genius Act includes what we call the Clarity Act. And there's going to be something surprising that I'm going to throw at you here in a minute, just to clarify something that a lot of people don't know that's going on with that particular law that they're trying to pass. As we know, Dubai positioned itself as the global blockchain hub with guardrails. With over 1,000 crypto-related firms operating, they allow startups to set up in the free trade zones. So they've been operating, like I said, with the virtual asset law since 2022. So they definitely have some background in this, and we can learn something from dealing with um, those people there in the UAE. So the European Union created the MICA regulation, right? And so I thought I had MICA somewhere, the actual acronym here. Um, I think it's like money in crypto markets. There it is, markets in crypto assets. Okay, MICA is market in crypto assets. So the key objectives that they wanted to deliver is to establish a unified rule book across the EU. They wanted to protect consumers, obviously, from the fraud that we see every day, support innovation, and allow for financial stability and increase crypto business and transparency, and of course, accountability for those that don't do right. So they introduced this in 2023 and they went into effect in December 2024. So MICA is EU's marketing crypto assets regulation. This is designed to bring clarity, consistency, and consumer protection to the crypto activities across all EU member states. So this is one that's been out there for at least a year or so. And it literally put a stop to some of the stable coins because of their regulation. There's Tether is still trying to get access. USDC on the Circle, which is the company that produced USDC, somehow it got cleared, but Tether did not get cleared to operate in the EU. Very interesting. Some guardrails. The key objectives of the Genius Act. Now we know the Genius Act is an acronym as well. And so the Genius Act is the Guiding and Establishing National Innovation for U.S. Stablecoins Act. Here's the difference. Even though it didn't say stablecoin specifically in the MiCA regulation, they focused on other than stablecoins. So if you had a stablecoin that was operating in the country, now the exchanges that were utilizing that stablecoin for good reason, now they were shut out and they had to reapply. That's a problem. Now you have, because there was a massive transition from the Bitcoin, from the Ethereum, from the Solana, from the ADA, from the LTCs, from all of those cryptos that were there, people were using BNB and everything. And when the stablecoin was there, Tether, USDC, all of a sudden it was 1 to 1. And so now when you send money, it gets there exactly as what it was when it started with the fees, right? And so that was just a better way to do business. Instead of you sending Bitcoin and guessing, hey, if I got to send, $1,000 worth of Bitcoin to an exchange that's in the UK, and I send $1,000 worth of Bitcoin today, and 20, 30 minutes later it arrives and it's moved 2 or 3 cents. Now all of a sudden with the fees, it may go in as 998. Well, if the minimum that you have to deposit is 1,000, which you did, but the fees and the fluctuation in the market knocks it down $2, now you can't engage in that action that you were wanting to do. So that's a big problem. So everybody wanted a stable coin, and that's what happened. Then the MiCA comes along, they institute their act, and now the stable coins are pushed to the side because they didn't want to play ball with that. Guess what? The Genius Act comes along, and in the name, they are telling you directly, we support the stable coins, even if you create a new one. But the rest of you, we may have a problem, right? So it flipped on us. A lot of people don't understand the ramifications of this Genius Act because within the Genius Act, there's the Clarity Act, which is kind of a subpart within there. And I'm gonna tell you, I got a slide in here that Brian Armstrong, the CEO of Coinbase, has some issues with. There's another video that I'm gonna have to finish reviewing, and then I'll give you the highlights of that one. And they are breaking down the Clarity Act and telling you the problem with this whole process. Because remember, the reason why Bitcoin and blockchain became relevant was after the crash of the traditional financial system, right? 2008, 2009, peer to peer. Look, if we can't go through our established systems without crashing, then we might as well just work together just like we did before the systems. That was the idea. Peer to peer. Look, trust less, right? The blockchain, if everything hits the blockchain, I don't need to trust you. I just know that the system works. And we could do transactions between each other. The Genius Act comes along and says, you want to put guardrails up, huh? We'll help you with that. Put the guardrails up, meaning we will have oversight, just like a bank, of all your transactions. Because on the blockchain, all your transactions are there. They don't know who sent it and who received it, but they're going to require everybody to put their information out there when you sign up to use an exchange. So if you want to use a Coinbase, if you want to use a Gemini, if you want to use a Qcoin, if you want to use Binance, whatever you're using, if you're doing it in the US, you're going to fall under this act and you're going to have to provide your KYC, right? And it's not like it was, whereas you would do it because of that company and they hold on to it. No, now with this act, they have to publish that information. And so there is no peer to peer anymore. It's just a facade, right? And so these are the things that we're going to have to get more information about. But there's a lot of people talking about the Genius Act and Clarity Act. I'm not here to do that because I don't have all the ins and outs, but I have listened to some of the people break it down, and it's like, man, it's definitely not what we thought it was, right? So you got to be careful with that. Um, but recently, just to kind of close this part out, like I said, Brian Armstrong, he had a problem with the Clarity Act portion of the Genius Act. He supported the fact that the current president did open the door for us to have some regulation because people are already doing business with Coinbase in order to tokenize, in order to trade crypto and things like this. All the Fortune 500 companies, the banks, everybody's looking at Coinbase saying, "Hey, okay, you're established, so let's work together to get into this crypto and tokenization." And so they're already established in that space, but there is some issues with how the the Clarity Act is written to give banks some a leg up, and expose a lot of the crypto side that shouldn't be exposed. So there are some issues there that I got a video that I will play, and I'll let you get a little bit of information on how the CEO of Coinbase views this whole situation, right? So here's just some information about some of the other countries that do have some type of crypto regulation. Canada, all crypto investment firms are classified as MSBs, which are money service businesses. They fall under their FinTrack. Japan recognizes cryptocurrencies as well as property, requiring crypto exchanges to register with the Financial Services Agency. In 2025, Japan requires crypto exchanges to maintain liability reserves to cover losses or hacks. That's crazy, right? Powerful. I support it. And if you're going to do crypto and you're an exchange, you definitely should be able to support the liabilities. If there's a hack or there's serious losses, then you need to investigate it. And if you need to make it right, you need to make it right. That's been something that's missing across the board. India has adopted a tax first approach that allows crypto use while discouraging speculative activity, which obviously a lot of the stocks and the way the system works over here is more speculative than anything else, right? So you can trade anything and you can speculate what the price will be so that you can make some money. Well, there's nothing tangible there. And so India is doing it right. Brazil legalized cryptocurrency payments and established a regulatory framework under that law. The Central Bank of Brazil oversees license and supervision of crypto exchanges. Cool. Switzerland remains one of the most trusted crypto jurisdictions in the world and one of the banking as well. So that's interesting. Its strength lies in legal precision, neutrality, and long-term regulatory consistency. So at the end of the day, they're really saying that, look, we have internal laws, but the neutrality, right? We're not going to get involved if we don't have to. And that's what they've done with the actual bank accounts traditionally as well. Let's talk about blockchain and crypto over the last year. Who were the top performers and who were the ones that just didn't work out? Real world assets is at the top, baby. Real world assets has become one of the most sought after, the most beneficial aspects or offshoots of blockchain technology. This was the standout sector of the year, over 179% gains and consistently outperforming Bitcoin. Another winner, institutional support. Central exchanges, right? The CEX centralized exchanges grew by 21%, and DeFi and infrastructure also posted positive returns driven by institutional trading and scalability improvements. What does that mean? That means that we as retail traders always been there, right? Win some, you lose some. We're talking maybe 100,000, 200,000, or whatever. Well, when you're talking about institutional trading, we're talking millions, right? And so that wasn't in crypto trading before, but now over 2025, more of that has creeped into the business. So when you see a MicroStrategy, when you see a Galaxy Digital, when you see BlackRock, all those getting involved, that the funds that they have are being traded at a high level on the T1 desks at those levels. So wouldn't you believe when they start acquiring this crypto, it's the same thing, right? And then the ETFs that come along and get approved for Bitcoin, Ethereum, LTC, then same thing is happening. Somebody is trading at the highest levels in order to grow that money. Major losses, though, for 2025. This may not come as a surprise. Speculative sectors faced heavy declines. We're talking NFTs drop, AI related tokens dropped. AI goes up, tokens go down. Meme coins losing value, drop, right? Definitely not something that, you know, that's like the pet rock. It was just a fad. It's just something that people were making money off of for no reason. This is some interesting stuff. Some of the disruptors. We're talking tariff announcements. Everybody knows about that, right? Tariff announcements, new trade policies in the news acted as a primary driver for volatility, causing crashes of over 20% in major assets like Bitcoin and Ethereum. Then you had liquidation events on October 10th. An event triggered the largest liquidation in history due to the concern over high tariffs. Again, those tariffs, you just mentioned them, and they're like, ah, selling it. I'm going to buy gold. AI bubble. Everybody is talking about AI, and you throw that in with crypto, you throw that in with Web3, and you have some amazing, amazing technology that's moving forward. Well, some people, and this is a very interesting thing, AI bubble fears skepticism regarding the actual profitability and adoption of AI projects led to persistent sell offs throughout the year. How does that happen? Because here's something interesting. If you look down at the bottom right of the screen, Sam Altman, the CEO of World, what is it? Oh my gosh, it just left my head that quick. Anyway, the it's a world. Man, I can't believe I forgot that. Anyway, he has his own, crypto, as well as he's a leader. He was standing in the Oval Office with Trump and the Oracle guy and somebody else when he first got there because, Trump was saying, "Hey, we're going to build up AI, right? We're going to win this AI race." So Sam Altman is like, "Hey, okay, I'm right here with you." All right. He's promoting AI. So why is it that Sam Altman, the person that's promoting AI, he's actually raising trillions of dollars for AI research and development, but he is the one warning people that it's an AI bubble? That is a little weird. Anyway, we'll move right on. Some key concepts that we're going to talk about today. Talked about blockchain, which is a public ledger, right? There's a private blockchain and there's a public blockchain. But what everybody has access to is the public blockchain, which is a public ledger that records every transaction, transparent and tamper proof, right? It is, excuse me, what we call immutable. So you can't touch it. After it's on there, it's on there. Can't move it. So that's where double-edged sword. If the FBI wants to come in and take a look at where your money is going and you're running it through blockchain, they have access. Why? Because they can see every single block of that chain. That's what the blockchain is for. Block Explorer is for. Now, yes, regulatory bodies have a problem with those private or security tokens or those private coins. They have issues with those. There's secret coins. There's all these type of things out there. But this is a public ledger, public blockchain, and yes, that's what's being used to push things forward. It's got to be public in order to move forward, right? We're going to talk about the RWAs, real world assets, right? If you didn't catch that earlier, real world assets, non-crypto, offline, physical assets of our day-to-day environment. For example, like stock, gold, credit, real estate. These are real world assets, buildings, things that we can tangibly see or we work with, real world assets. Cryptocurrency, we know that's digital money that is not controlled by the government, but they're trying to control it. Tokenization, the process of turning real world assets into digital tokens, right, in shares so they can be integrated onto the blockchain. Speaking of tokenization, I know some time ago, everybody knew JP Morgan or Jamie Dimon, the CEO of JP Morgan, president of JP Morgan or whatever. He actually was totally against Bitcoin. Didn't think it was real, didn't think it was going to do anything. Here we are today in 2026, 2025, this actually happens. And now in 2026, JP Morgan launches Tokenized Money Fund. They're at the leading edge of crypto, blockchain, and tokenization. How crazy is that? If you don't understand this as adoption, it's already here, it's happening. Your bank is probably getting ready to, they told you no last year. Now they're actually saying, hey, look, you can buy crypto ETFs from us. This is where we are. Like it's crazy. If you're not on board, like you're just totally missing out. The vision and trend for investors in a bigger picture, cryptocurrency has grown up and it is now positioned as its own asset class. In order to keep up or dominate in this new era, portfolio diversification should certainly include either Bitcoin ETFs or Ethereum ETFs are specific cryptocurrencies that have massive utility and potential. So at the end of the day, definitely, if you are somebody, I'm not giving you financial or investment advice. This is just kind of my personal research and my personal opinion. And basically what I'm doing in my portfolio is you're going to have stocks, you're going to have bonds, you're going to have, some ETFs, but hey, why not throw a small percentage of specific cryptocurrencies or cryptocurrency ETFs in the mix? BlackRock has ETFs and other organizations has ETFs for Bitcoin, for Ethereum, for Litecoin, and you can win that way, or you can go with XRP, and I'll talk about that here in a few minutes. The most savvy investors will research tokenization of assets in the DeFi arena to create a risk adjusted strategy for long term returns. This is what we're talking about. Get in the game or you're going to miss out. 2025, a year of strategic growth, right? The year of strategic growth. In the past, mm, in the past year, we saw the crypto market reach a total capitalization of over $4 trillion, driven by several landmark events, right? $4 trillion in 2025, right? So some of the events that we want to highlight, institutional adoption. We hear that a lot. I talk about it a lot. I say it a lot because it's true. Bitcoin reached a new high of above $126,000 per Bitcoin. That was supported by the establishment of the U.S. Strategic Bitcoin Reserve. You know that El Salvador, it was other countries, I forget the other countries, but there are other countries that have done the same thing, right? Established that Bitcoin Reserve. Ethereum evolution, the network successfully completed the Petra and Fusaka upgrades, significantly improving scalability and reducing costs for layer 2 rollups. Ethereum is used for so much in this development and this evolution to the next level of tokenization. And so it's great to hear about the upgrades because every network has to be upgraded, right? And these, I got a lot of references that you'll see as we go that you can look up some of this information and you'll see what these upgrades are, but it does really set them apart when it comes to being a part of the higher level institutional side that's going tokenization. And that's what Ethereum is positioned for that. And that's where the scalability and the layer 2 rollups come into place. Real world assets. Tokenized private credit and treasuries grew by over 100%, with major firms like BlackRock and Franklin Templeton leading the charge. And we'll talk about that as well. Stablecoin growth. Monthly transaction volumes reached 3.4 trillion. That's monthly transactions, $3.4 trillion as new regulatory frameworks like MiCA and Genius Act provided much needed clarity. So on the surface, hey, MiCA, boom, EU, hey, we got some regulation. Let's go ahead and get in there and do things the right way. Genius Act comes along. Hey, exchanges in the US, boom, let's get on board. Let's do things the right way. So that's kind of where that came from. Something interesting that did happen that I hadn't put in here is, Coinbase went public and they're traded on the New York Stock Exchange. G- Gemini did the same thing, right? Gemini is another American regulated exchange that a lot of people use in the US. They are on the New York Stock Exchange as well. So a lot of people didn't know that. So, as I mentioned, bam, 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 breaking news. While the Genius Act and the Clarity Act within that goes to the Senate for, you know, approval, everybody's like, yes, yes, yes. Guess what happened? Coinbase CEO said, hold up, something's not right here. And let me show you and let me let you hear it from him directly.
America should be able to earn more money on their money. I think stablecoins are an opportunity for banks. They should be able to build great product lines with this. It's an opportunity for crypto companies. Congress and the laws that get passed, they should really create a level playing field. Say this is allowed, this is not allowed. Now, all American companies go compete, try to build the best products and services. That's great. What's not great is if the banks put their thumb on the scale to try to kill some of their competition, and they only pay about 14 basis points on the average savings account. Consumers should be able to earn 3.8% on their stablecoin rewards. And so we're going to keep fighting for our customers' rights and the 52 million Americans who use crypto every day.
Wow. So you heard it there. At the end of the day, they got to get it right. And I'm gonna tell you the one thing that jumped out at me in that particular, conversation was the fact that the stable coins should be able to continue paying out dividends, paying out percentages, APY, on those particular deposits. But the Clarity Act, the banks lobbied, they came in and said, wait a minute. If the stable coins are allowed to allow people to earn money on their deposits and their savings that they have in that particular exchange, then they're going to take money from the banks and put it into the exchanges because they're going to get a higher return. Who's mad about that? The banks, but I'm not mad about it. Why? Because I'm gonna put my money where I'm gonna make the most. And that is where the problem that Coinbase has is why are we allowing the banks to come in and try to mess up this, regulation that we finally got some regulation. We finally got some understanding of how we can better operate with this particular cryptocurrency in the US under actual regulation. And now the banks are coming in saying, no, 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 we want a bigger piece of the pie. And now it's a problem. So Coinbase is saying, look, we'll keep doing what we're doing. We're going to, keep taking care of our folks. We're going to keep paying out, dividends. We're going to pay out, um, yields on your staking until y'all figure it out. I mean, point blank, period. That's what I think should happen. And I'll definitely want you to stay tuned for blockchain and crypto beyond 2026. All right.